Hello, folks. Brandon Chapman today. It's Monday, July 15th, 2024. We're talking about the dystopian trading day today. Of course, we had a series of events happening on the weekend, the assassination attempt that kind of creates this dystopian view of the world, of the U.S. And of course, today, the markets appear to be trading off of some of that imagery as well. Of course, the definition for dystopian is what? Imagine a state of society where it's great suffering or injustice, and you think about a place where you can take somebody out. It certainly leads you to believe that, and how would you trade based on that understanding? So, thus the tag for today, the dystopian trading day. We're going to look at some dystopian related assets. We're going to talk about the villain today as well in the market and see where does this dystopian view and how does it play out for the markets more generally. So we look at the market, we look at the S&P today, it's up about 0.25%. We look at what's leading, energy leading out, financials, industrials, real estate, communications. Lagging today, of course, is utility staples, healthcare. Technology, basically, middle of the pack. And really kind of lost some of its vigor today, both to the downside and to the upside. We saw last week when we had that selling day right there that look, the market was dragged down, and yet other sectors were up strongly. For example, utilities. And so again, I mean, NVIDIA and the monsters of tech, what do you want to call them? They are still the most important part of the market. And so the fact that they didn't quite drag the market down today, NVIDIA was only down about 0.6%, it just shows it was just the amount of decline did not really cross that level to really drag the market lower. But we look at NVIDIA today, we're basically hanging out. Today's lows, basically the same low we had on Friday, same low we had on Thursday, off that very large candle. We start to break that level, we're going to really roll back, and we may see additional market weakness. But let's get back to this notion of dystopian worldview. I mean, if you think about, how you might communicate in a dystopian world, I mean, handheld radios and other things. Well, what about stuff like Rumble? Rumble, if we think about some of the House oversight, some of the stuff going on there, calling out some of the strictures that are being placed by government agencies or pseudo-government agencies in this space. Rumble today, nice breakout. I mean, you look at the news on RUM, now it says a multiple exclusive brands, maybe starting to attract a little capital there. Again, this is a platform, a social media platform. DJT. I mean, my goodness, after the shot, the taking the chunk of the ear out. I mean, this is a big deal. DJT up 31% today. So it seems like, again, some of these media channels, alternative media channels are seeing a boost today. I mean, you hear about some stuff about some of the networks, some major networks, basically taking down some of their talking heads and just doing some news instead, afraid of the rhetoric that might come out. I mean, is this going to clean up the slate, clean up their talk? And again, the kind of the inflammatory talk that goes on TV shows, etc. We'll see. But again, you're seeing kind of alternative media outlets, DJT, Rumble, experiencing a nice break today. Elon Musk did comment on the number of I forget the impressions or whatever it is, hitting a record high, I believe, over the weekend as well. So people are searching out alternative forms of media. We're seeing that kind of playing out there with big boost in Rumble and DJT. What's another scenario that might be playing out in a dystopian type world review? You think about areas that might be a medium of exchange or store of value. Let's just bring up GLD, the gold ETF, up slightly, about 1/3%, but there was some significant call activity today in GOLD. While it did fall back slightly, you'll see in the July expirations in here. Sorry, we kind of went to that bearish trade earlier today in my session, but you're seeing there's some calls being bid on the 19 strike. Again, we're seeing that kind of playing out, but especially you're seeing it play out in Bitcoin. Bitcoin, obviously, you don't have to store it. It's not heavy, it's not big. This stuff can be stored on a hard drive in cold storage. But look, I mean, Bitcoin's up 10% today on the news. I mean, obviously, Trump has discussed, having more of a favorable view towards Bitcoin and Bitcoin-related products. I mean, my goodness, we should allow people to transact in the currency of choice. We don't need a central body to tell us, hey, you need to buy and sell this This is your currency. We should be able to decide multiple forms of currency. People say, hey, what about a gold-backed dollar? Forget it. Just let us transact how we want to transact. And while Bitcoin may not really fit with a lot of smaller transactions, but when you get to foreign countries and cross-border payments, larger transactions, it can be very viable in that context. But Bitcoin making a large move today, and we're seeing a lot of option activity in this space. Mara, so we had a spread that we'd had on for over a month. We're getting to expiration this week, and all of a sudden, boom, the big breakout here allows us to shut it down for a little bit less than 100% return. We rolled it into a new spread in Mara. Mara has positive skew. The option spreads are pretty cheap out here. As you look, rising call volatility lessens the cost for a long call vertical spread. The trade today in Mara was for a 2 August expiration. And again, you'll kind of see it out here in the money at 22. But again, there's a lot of buying today of options in Mara and related products, like, for example, Riot. Again, these are miners of Bitcoin, but again, seeing some positive dynamics. These are, of course, have high short interest. Generally, they're kind of in a position where they might get a short squeeze. So sometimes looking at the stock over the ETFs like BITO or others that track, Bitcoin generally, this sometimes provide additional upside potential because of their high short interest. But Riot today, a 1250 and then 15 and a half hours a ratio, long vertical spread. And no, sorry, it wasn't a ratio on that one, but about 4,400 contracts, 1250 and 15 and a half hour long call vertical, buying 90%, 98%, selling 124%. If you can get at least 10 cents, it's probably worthwhile selling. You can see it's over 10 cents out there. So again, 11 days, well, you could extend it out longer, 32 days. You have the chance of benefiting from the rising volatility structure of buying lower and selling higher in these verticals, something I go over every day during my sessions. So again, you're seeing kind of that cryptocurrency trade, even in Coinbase, which to me, it's a centralized, it's not DeFi, it's not, again, but it does tend to move sympathetically. It does tend to have higher short interest. But Coin today, even in that 26 July expiration, again, you're seeing that option activity out there at the 270 strike buying out here. So again, a lot of call option buying in cryptocurrency and related trades, even a hood, allows you to, trade cryptocurrency as well. Hood tends to move along with it. Hood breaking out of a kind of a symmetrical triangle formation. And again, you think about the range here from about 24 to about 20 and a half, a little over a little less than a 4-point range off the break of 23. You might be looking at a $27 target on Hood here as well. So Hood doesn't have quite the short interest it had in the past, but it is a breakout here. And again, moves sympathetically frequently to moves in cryptocurrency. So you think about alternative assets or a store of value, medium of exchange, Bitcoin and gold doing relatively well today. What's the pathway to that dystopian future? Obviously, deflationary events, first by inflation, then by deflation. You think about banking and the potential weakness there, but initially, if we're looking at rate cuts, Jerome Powell certainly indicated that regional banks are being lifted here. They tend to lend money a little more exposure to the real estate market. Well, if you look at real estate, it got a nice boost last week with the drop in yields. So if you're following what happened with, for example, the 10-year treasury yield and the big drop that it had, for example, on the 11th, July 11th, I hope you got your Slurpee on that day, by the way. I got mine. My son went to several locations. He got his Slurpees. But anyway, 7-Eleven brought with it a little bit of slurping, a drinking of the Kool-Aid on the part of real estate companies. IOA, huge move there. But again, first, where are we going to go from here? I mean, what kind of future do we have in commercial real estate and other real estate names? We're talking about a temporary boost due to the fact that we're looking at pricing in more rate cuts by the Fed, or really more solidly 2 rate cuts by the end of the year. We're getting kind of that enthusiasm that may eventually turn into pain, because eventually the worm will turn in the real estate space. We will see significant downside here before does the Fed step in again and step in and buy REITs. My goodness, I mean, Japan did that in that dystopian view. Certainly Powell probably and company with the Fed probably engages in more Japan, the Japanese central bank, or Bank of Japan rather, type activities, buying stuff, anything that's not nailed down. And so again, that's the short-term pathway, but we're seeing strength today in regional banks. We've talked about a number of bullish option activity trades, call activity trades in carry over the last little over a week. Today is no different, right? You're seeing that boost. In this case, it's that October expiration out here. So buying kind of some longer dated options, dovetailing with the perception that, hey, the Fed's going to cut, buying the 60s in here. I mean, we got the, where is it? Lost my, there we go. Even out here in July, for example, we're buying these out of the money calls and again, helping create that gamma and the squeeze. If treasuries rally, certainly it repairs some of the balance sheet, but more looking towards cutting of rates, normalizing of the yield curve, but be careful what you wish for. Normalizing the yield curve through rate cuts generally accompanies recession. There's your dystopian hit, right? Where there's great suffering or injustice. And again, it's going to be led by the banking space, the boom bust cycle in full view here, with banks, et cetera. Again, in a dystopian world, energy oftentimes appears to be relatively more scarce. So why not buy oil right now? I mean, you look at forward/CL, we've had some big draws in the last couple of weeks. Oil's down slightly today, but when you look at the product depth, what you see is a falling term structure. As you go out in time, prices are dropping. We're seeing a forward, a positive net cost of carry here. And so what this means is that ultimately these prices are going to converge with a higher spot price. It's going to create upward lift as there's an implied shortage right now of oil. And again, we look at some of the dynamics playing out today in the energy space. XLE is in the mix here. XLE up nicely about 1.5% today. You can see it over here for today's movement. It is the best performing sector on the list. Stocks like Exxon kind of leading the way. Significant option activity in stocks like SLB, about 3.32%. This is a September expiration out here. And again, we're looking at call option buying at the 52.50 strike. I was looking at last week with our subscribers, Halliburton. Halliburton made a nice 3.8% move today. There's been a very strong volume divergence here. So if you look at on balance volume, notice that this is rising as the price is falling. You look at the level in the on balance volume, it surpasses any level we've seen all year long. The indication here is that Halliburton may go to 42. Really, it is indicating we'll go north of 44. And so we kind of talked about this. Halliburton does have earnings coming up here on the 19th. But again, I've been kind of talking about the last few days. Halliburton, a potential move there. Schlumberger tends to follow suit as well. SLB as well. We're seeing another higher low out of Schlumberger. We have kind of that measured move here. And so again, we might be looking at a decent movement in the trend. 261 gets you back to like 55-ish. The volume definitely diverging. Goes back to levels we haven't seen since back here in October of last year, which certainly dovetails with that 57 level. I like Halliburton just a little bit more just because from a technical basis, because of the volume divergence we're seeing here. 44, it would be the target plus because of the development there. Banking, you look at the top performer in the S&P 100 today, it's Capital One Financial. Again, what's going on here? Are people less indebted? Are they making their payments more readily? Capital One does kind of hold on to the balances there. They have risk in it, and yet the stock's up 4.5% today. Earnings are coming up here, but again, near term, we got to create more debt in order to create that dystopian, painful, suffering, injustice type future. And so again, Capital One today experiencing both bullish option activity and a rise in the price as well. Charles Schwab, I'm on Thinkorswim here right now, but Schwab dropped and rallied today. Probably raised some of these lines, but in Schwab, we saw today in terms of trading activity. This is a September out here at the 70 strike long put activity, and again we're seeing in that financial realm some potential bearishness leading in ahead of the earnings coming up before the market open tomorrow. So again, hard to act on that, but again, you're seeing that trade today just ahead of the earnings. And again, what trade is probably more synonymous with pain and suffering if it were to go south? we look at semiconductors. So we looked at NVIDIA a minute ago. NVIDIA is certainly a big part of SMH in terms of its percentage weighting. We saw big selling there on the 11th as well, consolidating yesterday, Friday, consolidating again today. We start to break through the lows there around 270. We're looking at significant downside at 255, and we're likely well below that as we've seen higher volume on the down days here in SMH. And for this one, it's a July expiration, 4 days out here. And we scroll up here at the 265 strike in SMH. So again, we're seeing money flow on the bearish side of things. That's 265, indicating a break of support here. But boy, we start to take out 255. We're looking at a much, much bigger correction in SMH, just at a point when a lot of people, a lot of mom and pops have really come into the semiconductor space, have really come into NVIDIA. It reminds you a lot of what happened during the tech bubble in 2000, for example. Again, companies that just well overrun. I mean, NVIDIA in 2018, NVIDIA in 2020, well surpassed, and you started to see the downgrades start to begin. We just saw that last week with some downgrades from NVIDIA as well. So again, just realize that, look, I mean, there's risk right now, and there are those that are playing the downside and selling into this rally. And again, I think that the option activity really shows that right now in SMH. And we've seen more bearish option activity if you go back to NVIDIA over the last several weeks. We saw it kind of leading into the highs here. And so again, we've just been kind of playing out. And today, NVIDIA underperforming the S&P 500. It was IWM, the Russell 2000 ETF, that really did well today. And one dynamic you saw last week start to develop, we talked about this on Friday. One of our subscribers at TheoTrade named Tim, he brought up the fact that, hey, we're experiencing a positive vol skew in the Russell, which is crazy to think about. That we're buying calls. And again, it's kind of diminished somewhat, but we took on an in-out spread in an IWM on Friday as a result of that. Notice that the vol is a lot more flat in here. It's much more steep, rising vol structure on the call side. We just barely pulled that off today for like close to a 50% gain, because again, we're just playing into the dynamics, right, of the speculative excess in the market. You'll see a little bit in here where the call volatility is rising, which allows you to place call spreads. I think we actually did 10 days out. It was the 24th of July. I mean, I guess it was the right expiration, but again, flattened out a little bit, but the rising vol structure makes those call spreads cheap. And you just saw that speculative excess come into the market in IBM on Friday. So we kind of got that boost today, closed it out, done. It was a 46% gain in one day for an in-out spread. That's pretty good. Usually target about 30%. So this is what's happening, right? We're just being coaxed to sleep, stepping into the market right now, again, creating this speculative rally. These speculative rallies frequently end in pain and suffering, right? For those that are long. You saw it in many other times in the past. If you've been through a bearish kind of crash, again, the 2010 flash crash, 2020, the financial crisis going back to 2000, I've been through all of them in terms of being in this industry for almost 28 years. It's hard to get super excited when you see just rallies day after day after day. But guess what? The skew, we kind of tick lower on Friday, about 150, which is a little surprising. I thought we'd tick higher. But we're talking about historically elevated state in skew, basically buying puts, selling calls into the strength here as the VIX scrapes the bottom. Again, this kind of creates that potential here for crash risk. And it doesn't mean you can't be long. You just got to trade small, have a smaller footprint than you normally do. And I get it. Out there, people are talking up, hyping the market right now. And a lot of people are being coaxed to sleep on risk. Even larger institutions are joining the fray. But I still think, again, with the higher skew, the low VIX, again, some of the dynamics we saw last week in terms of rotation, there's some definite selling underneath this market. It's just a matter of not if, but when. And again, at that point, if we break, the rally we've seen over the last year certainly is going to hurt a lot of accounts for those that are long the market on a very extreme basis. And again, we just got to be prepared for that downside to occur while still being able to capture some of the upside. So in this kind of dystopian discussion today, and again, how to trade for dystopian days, the dystopian trading day, whatever you want to call it here, this is certainly one of those things where, hey, there's stuff that probably works better in this environment if the market holds up. And right now, it's not technology. So we got to change that kind of view for the moment. It's one of the reasons why I use option activity to kind of steer me in the direction of where money may be going. And right now, we kind of talked or outlaid that today. And we'll catch you back on next week's video. Have a great one. Thank you.